Today, we will be starting off with a new subject. So let's dive straight in. Now, managing finances is a part of our everyday life. Let's see some of the events that we usually organize.
I am going on a holiday. Need to manage the finances.
I am hosting a party. Need to manage the finances.
So, whether we are going on a holiday or hosting a party, we need to manage the finances. Now, what exactly do you mean by managing the finances? It simply means that you have to find out from where you are going to acquire the funds, whether you're going to use your savings or whether you're going to borrow money. Once you get these funds, you need to decide how to use these funds. You need to use these funds in the most efficient manner. Now, just like that, any business is a combination of many events. So definitely, we need to find out from where we have to acquire the resources and how we have to use these resources. So in short, financial management means efficient acquisition and deployment of financial resources. So we need to find out the most efficient way in which we can acquire the financial resources and the most efficient way in which we can deploy or use the financial resources. The various methods in which the funds can be acquired is either by way of shareholders' equity or through other long-term borrowings like debentures. Now, what we have just seen is the long-term financing methods. Now, how do we deploy or use these funds? We have to decide how much we have to invest in the non-current assets like buildings.
And we have to decide how much has to be invested in working capital. Now, what do you mean by working capital? Working capital is nothing but current assets minus current liabilities. Now, you all know that current assets are assets like stock, debtors, etc. And what do you mean by current liabilities? Current liabilities are those liabilities which are due within 1 year. Say, if you have taken a bank overdraft or other short-term borrowings. So basically, current liabilities is the short-term financing methods. So whenever you are deploying the funds, you have to decide on the working capital requirements. That is, what is the amount to be invested in current assets net of current liabilities.
So basically, we have to decide how we have to invest the funds that we have obtained. So financial management is concerned with the long-term financing, and further it is concerned with how efficiently we can invest the funds of the company. So financing and investment is taken care of. Now, the final area with which financial management is concerned is about the dividend policy. You cannot retain your entire profits in the business. The shareholders will remain unhappy. So we have to decide how much of the funds have to be used as distribution towards the dividends. Now let's see how financial management is different from management accounting and financial accounting. We've already seen that financial management is concerned with the efficient acquisition and deployment of financial resources. Now coming to management accounting. Management accounting is related to providing information about day-to-day functions of control and decision making. Now, one of the major tools of controlling the day-to-day functions of the organization is the budgets. So budgeting and the variance analysis, everything comes under management accounting. And decisions concerning whether we have to make the raw material in-house or whether we have to buy the raw material from outside, decisions concerning the optimum production plan. That is, which all products have to be manufactured in what quantities so that the profit is maximized. So all these comes under the purview of management accounting. Now coming to financial accounting. Financial accounting in simple words is just historical results which are recorded. So whenever we are recording any event, whether we have purchased a raw material or whether we have sold certain goods, when we are recording it in the books of accounts, then that is financial accounting. Now, moving to the second point of difference, we can say that financial management generally has a long-term impact, because whenever decisions are taken regarding the issue of shares or regarding the issue of debentures or regarding any investment policy, then it definitely has a long-term impact on the company. Now, management accounting has a short-term impact only, that is less than 12 months generally. Now, if you take the budgeting exercise, the budgets are prepared for 12 months. So the purview of management accounting is relatively short term. Now, the financial accounting. Financial accounting is basically recording of past events. We are just making everything recordical. It doesn't have any future impact as such. Now, there could be multiple choice questions and you have to decide whether a particular transaction is related to financial management, management accounting, or financial accounting. So I will give you a quick view of the difference so that you will be able to get the answers in a jiffy. Financial management is related to the acquisition and deployment of financial resources. Management accounting is usually related to variance analysis, because variance from the budgets and any decisions relating to the costing aspect, that is how the overheads have to be divided between the products to arrive at the correct cost of the product, whether we have to adopt ABC costing or whether we have to adopt absorption costing to divide the overheads again to arrive at the cost of a particular product. And financial accounting, as you know, it is just recording of past events. Now let's do some problems regarding this. So I've just copied the quick view of management accounting. Management accounting, anything related to variance analysis, costing, etc. Financial management, anything related to the acquisition and deployment of financial resources. And financial accounting is recording of the past events. Now, the first question is review of overtime spending. Is it related to management accounting, financial management, or financial accounting? Since it is a review, it's not a recording of past events, so definitely it is not financial accounting. And whenever you are reviewing an overtime spending, you are not acquiring or deploying any financial resources. So definitely it is not financial management.
And overtime itself means that there is a variance from the expected hours of work. And if you recollect the purview of management accounting, it is providing information about the day-to-day functions of control. Now, whenever you are reviewing an overtime spending, it is definitely a way of day-to-day control mechanism. So therefore, review of overtime spending relates to management accounting.
Now, moving to the next question, depreciation of non-current assets. Whenever we are recording depreciation, it is definitely financial accounting. Now, the third question, establishing dividend policy. We already saw that dividend policy is a method of deploying the financial resources. So it is related to financial management. Next question, evaluating proposed expansion plans. We are making an investment. So it is definitely related to financial management. Moving to the next question, apportioning overheads to cost units. Apportioning overheads, dividing the overheads to arrive at the cost of a particular product. Costing, definitely it relates to management accounting. Moving to the last question, identifying accruals and prepayments. We have to record the prepaid expenses. We have to record the accrued expenses. All these have to be identified for recording in the books of accounts. So definitely it's recording the past events and hence it relates to financial accounting. With this, we come to an end of today's session. Stay tuned for the recap ahead.